firm. And he's got history. He's been around enough in the markets. He's got very good quality presentation to teach you guys today on what he considers to be his most effective trading system ever. So I'm going to do a little housekeeping here to start recording. All right, here we go. John Thomas, welcome to Trade Thirsty. I'm going to make you the presenter, and that's going to give you the ability to share your screen. We are recording today's event, so you guys just be patient with us and give us a couple days to get it out.
Can you hear me?
I can hear you. Try another audio test for me real quick. Got a little bit of...
Test 1, 2, 3, 4, 5. Are you reading me fives?
I hear you. I got you. All right. It works.
Yeah, I love that southern accent. Accents are disappearing in the United States.
Well, I'm probably not going to leave Alabama. If I do, it won't be for very long because we all come back. So pretty sure I'm probably going to the grave with this one. So thank you. You have 1 hour, Mr. Thomas.
Take the woman out of Alabama, but you can't take Alabama out of the woman.
Pretty sure you can't. Go ahead.
So am I allowed to participate in the trivia contest? I'm pretty good at these things.
That's a no. You cannot. I should have thrown that rule in there. You cannot participate. You know what? You can participate all day long, but if you get there first, we'll probably pass the $50 to whoever gets in there second. I love you to play, but you can't win. How about that?
That sounds like a fair deal to me.
All right. Go ahead.
Well, let me get on with the most effective trading system ever. I know it sounds corny, but it's true. It's only taken me 50 years to develop this system. However, it's been absolutely kicking butt, and I thought I'd share it with you. First of all, why listen to John Thomas? Why waste the time of day on me? Well, I have 48 years of experience in the global financial markets, 10 years as the economist correspondent in Tokyo, Japan, later the White House, 10 years running the international equity division at Morgan Stanley, little brief stint as a Marine combat pilot in Desert Storm. As a result of that, I still set off metal detectors at airports. 10 years running the first international dedicated hedge fund. 5 years fracking for natural gas in Texas. And boy, did I get some great steak lunches out of that one. Now 9 years publishing the Diary of a Mad Hedge Fund Trader, and I'm one of a handful of founders of the modern hedge fund industry, and one of the only ones still trading. The other reason to listen to me is performance. This is our trailing 1 year daily audited performance. We're the only online mentoring services that has our performance audited daily and posted online. We eat our own cooking. We live by our numbers. 41.68% in very difficult trading conditions. And no, I was not lucky in the last year. This is actually our average annualized return for the last 7 years, and that works out to 37.32%. And after the run we had in the last week, I know it's well over 38%. So performance. It's all about making money, keeping the chart going from the lower left to the upper right. There is no other standard. You either make money trading or die in this business. I do get a lot of my best ideas hiking uphill in the Sierras at 8,000 feet, carrying a 60-pound backpack. That's me a couple of weeks ago near my Lake Tahoe home. We had a record winter, 70 feet of snow. Unfortunately, my house got demolished from the weight of the snow on the roof, so it's being rebuilt as we speak, and that is Lake Tahoe right behind me. If you are not up 41.68% in the past 12 months as I am, you are reading the wrong newsletter or following the wrong trade mentoring service. And by the way, if you have any questions on any asset class, long or short, anywhere in the world, just type it in your question box and I will get to it when I have a break. And just let me get the question box out here where I can read it. Just give me your first name and where you're from, and I'll get to the question when we get to the asset class. This is my Mad Hedge Profit Predictor Market Timing Index. This is an artificial intelligence-driven algorithm, self-learning, that analyzes 30 different economic, technical, and momentum-driven indicators every second of the day. Try and beat that with your own trading system. It runs real time and optimizes returns with the addition of every new data point going back 30 years. So every second it takes a new data point and analyzes that in a 30-year context and recommends your long or short positioning, the size of your position, and which industries you should be focusing those investments in, or which asset classes. As of yesterday, it was showing a reading of 33, which is in the moderate buy territory. Under 25, that's strong buy. Over 75, that's a strong sell. And the performance of this has been nothing less than spectacular. Why do you need an algorithm? Well, why use a toolbox missing its most important tool? Algorithms have become so dominant in the market that you should never trade without one. Algorithms today account for about 80% of total market volume. It does the work of a seasoned 100-man research department in seconds. With an artificial intelligence-driven learning program, it upgrades itself with the addition of every new data point. It runs real-time and optimizes returns with the addition of every new data point far faster than any human can. Don't go to a gunfight with a knife. Oh, I've done that before. It hurts. If you are trading against algos alone, you will lose. Algorithms provide you with a defined, systematic trading discipline that will enhance your profits. Even if you don't rely on it totally, it's always nice to get a second, third, and fourth opinion on every single trade before you do it. Yes, I've been trading for 50 years. I did not like the entry of algorithms to our business, but you know what? They're here. They drive the markets. If you trade without them, you'll get slaughtered. Few algorithm inputs. Those of you who are technical geeks, technical analysis geeks, these are some of the 30 variables that go into it every second. We have 50 and 200-day moving averages across all markets and industries. Of course, the volatility index, you can't go anywhere without the VIX anymore. Stocks hitting 52-day highs versus 52-day lows. McClellan Volume Summation Index, 20-day stock bond performance spread, 5-day put call ratio, stocks with rising versus falling volume, relative strength indicator, 12-month U.S. GDP trend, and the Case-Shiller S&P 500 National Home Price Index. Yeah, gone are the days when you just looked at moving averages and the RSI. It used to be that simple like 20, 30 years ago. It is no longer. You need all this stuff working all the time and updating real time as fast as a computer can calculate. This is 3 years of the profit predictor performance, just to show you exactly what it plays out over time. Every time we get a dip in the index, 25, below 25 is an ideal buy point. You buy the markets or buy individual stocks or asset classes. And every time we get over 75, you want to sell them. So you look at this, buy, sell, buy, sell, buy, sell. You get several round trips a year, plenty of trading opportunities. It is a fantastic discipline to have working behind you. Let's see what the performance was over 3 years. What did we actually get in profits using this system? Well, the S&P 500 over the same 3 years was up 39.53%. Not bad. It's easy to be a genius in a bull market. Everything you touch makes you look smart. All you have to do is remember not to go short. How did my trading system do over the same time frame? Well, we clocked 106.21% over the same time. And again, this is our daily audited performance, independently audited performance. So that is more than triple what the market did. And again, the drawdowns were much smaller than the market. We basically flatline whenever markets are bad. And we go sharply up on the upturns. So we've had some very sharp upward spikes lately, thanks to our president who likes to tweet a lot. Let me give you some examples of how this works. Last July, we got a very strong buy signal on Goldman Sachs. We loaded the boat there. Our people made a lot of money, and the stock nearly doubled. We went from 140, 138 and change, up to almost 260. By the way, we did get a sell signal up here on Goldman Sachs at the beginning of March when the whole market looked like it was rolling over. U.S. Steel, the amazing thing here, it correctly called the presidential election, even though I got it dead wrong. Most money managers got it dead wrong. In fact, our market timing index, put out a buy on U.S. steel a week before the election, which meant that Donald Trump was going to win, even though the polls said he wasn't. And it wasn't just U.S. steel that did this. We also got the same calls for Freeport-McMoran, the commodity stock, the coal companies, the KOL ETF, and several other asset classes. So when this happens, when the algorithm goes completely contrary to my fundamental call, I don't bet against it. I just go cash. And boy, that really worked well this time. This is why most hedge funds got slaughtered on the election, and I didn't. In fact, I went in the election with a position in Facebook, which I made money on, a position that in the XIV, betting that the volatility would fall, and both of those turned out to be good money makers. The New World Order. By the way, get your questions in, and I'll read them when we have a break. There are a couple of breaks coming up. I see a couple of them are coming in, and I guess New Hampshire is the live free or die state, says Rick. Okay, control the presidency, the House of Representatives, the Senate, and the Supreme Court mean the Republicans have a free hand on business and economic policies for at least the next 3.5 years. Republicans block fiscal spending for 8 years, but will now move ahead eventually. We don't know how long, but the market is discounting the fact that it will happen sometime. $1 trillion in new infrastructure spending amounts to a quantitative easing 5.0, and you all remember how the first QEs did. They caused the stock market to triple in 8 years. A massive Keynesian stimulus to the economy could double economic growth in the short term. Inflation will make an earlier return. It all adds up to a big risk on and a buy. Not so fast. There are a few catches. No matter what the president says, markets will stay flat or even fall until they see concrete action by Congress on tax cuts and deregulation. The healthcare bust puts the bull market on hold. Tax cuts could take 6 months and deregulation years. A conservative Congress is historically opposed to big tax cuts. Notice that the far right wing, the Freedom Caucus, won't vote for anything that incurs more government debt, which you have to applaud them for that. We have enough government debt as it is, about $20 trillion worth. That is diametrically opposed to the president's announced policies. In the end, it may be House Leader Paul Ryan who determines the future direction of all asset prices. Conclusion, trade or die. If you're not trading this year, you're getting slaughtered because the markets are basically doing nothing. And a lot of elite groups like financials are down on the year. This is what Lake Tahoe looks like. This is where I have a home and an office. And it is utterly spectacular. It's inspirational, keeps me working. I'll basically keep working till I drop dead, which hopefully isn't for another 20 years. Stock profit taking, rapid rotation between sectors continues with no net movement for the indexes. Technology is out this week. Industrials are in. That could reverse the following week once we get the French presidential election results. The chance of a second Korean War is scaring traders out of the market, forcing them to cut back positions and keep them small. Dramatic slowdown in hard economic data is adding fuel to the fire. Notice that the hard data is rolling over like the Bismarck. The soft data, which is based on surveys, is still extremely positive. Q1 earnings are playing out, but disappointments are occurring more than expected. Two big ones last week were Goldman Sachs and Johnson & Johnson. S&P 500 forward PE earnings ratio at 19.5 times is the ceiling for now, maybe the ceiling forever. We just have to wait 3 more months for earnings to ratchet up to take the market higher. There is no crash coming, even though things look dismal today. I'm still looking for a 10 to 12% total return in equities for 2017, but a 5 to 10% correction may have to occur first, especially if we bomb North Korea or anyone else. Here's the S&P 500. There's our March 1st peak, stuck in a narrow range since then. We had a false breakdown on the 50-day moving average there. Final support in this whole move will be the 200-day at 218 in the SPYs. 10 reasons why there will be no 2017 crash. Yes, I know there's some perma-bears out there which are permanently calling for lower stock prices or even a total crash with the Dow going down to 3,000. It's not going to happen. U.S. stocks are still one of the highest yielding asset classes in the world at a 2.5% yield. Oil prices are still less than half of where they were 3 years ago, and only, excuse me, a third of where they were 5 years ago. Weak yen and euro are stimulating Japanese and European economies to buy our exports. While U.S. interest rates are rising, they're doing so at a snail's pace. We got all the way down to 216 on the 10-year this week. That is barely above where they were 4 months ago. Delayed U.S. interest rate hikes will keep the U.S. dollar cheaper for longer. Technology everywhere is hyper-accelerating. That is boosting profits. Stock buybacks at M&A are shrinking the supply of equities. Lower supply means higher prices, as it does for any commodity. Tax cuts will kick in eventually, but that may be a 2018 or even a 2019 story. So will a big infrastructure bill. The coming trade war will die on the vine. It will never get through Congress. Tech stocks and emerging markets are telling us this is the case, and they've been doing so for the last 3 months. Technology lives. After initial shock, tech is rebounding strongly. The world's most profitable companies are huge beneficiaries of corporate tax cuts. Technology companies will benefit the most from any cash repatriation plans. Apple alone can bring home $250 billion. And by the way, that'll mostly go to buying Apple stock, which is why Apple has been hitting new all-time highs almost every day this year. By the way, that's been a core along of ours since it went public. So yeah, we've been with Apple forever. Hyper-accelerating new technologies mean that profits will keep growing at 20% a year no matter who is in office. Tech makes a great hedge in case the domestic plays roll out slower than expected. Big institutions and hedge funds are loading the boat on every dip. And if you really want to be lazy and just trade one sector for the rest of your life, make it technology. The wind is behind you basically all the time, except for the occasional 50% correction along the way. Remember, Apple dropped 40% in its last sell-off. So, yeah, you have to be careful. And that's when it's helpful to have a market timing index helping you make these calls. NASDAQ has been this year's tech leader. Again, even though the rest of the market was rolling over, NASDAQ was hitting new highs. Facebook, we got a buy signal at the beginning of the year on Facebook. We've been long ever since, and the stock has basically been off to the races practically every day. This chart is a little out of date. We hit 144 yesterday. Apple, new highs again. This is now Warren Buffett's second largest position. Warren Buffett, who hates technology, maybe he's using this to offset his major holding at IBM, got a buy signal in December on this, and we've been long ever since. Netflix, again, they're taking over the world. Another strong buy signal there on the post-election dip. Notice that we never failed to break the 50-day moving average. That has been a very strong buy point all the way up. Alphabet, again, this stock will hit 1,000 sometime this year. I'm pretty well plugged in over there with senior management. I, in fact, was invited to make a venture capital before they went public, and I didn't do it because what they were doing at the time seemed so insane, but, live and learn. But anyway, we got a buy signal there, again, on the false breakdown of the 50-day, and that is a recurring theme in a lot of these technology stocks. Buy the breakdown, the false breakdown of the 50-day. Amazon, same story. This is another $1,000 stock this year. We all know they're taking over the world. Just to give you some examples, in March, retailers in the U.S. cut 60,000 jobs. Unbelievable. 60,000 jobs in 1 month. Amazon plans to add only 5,000 jobs for the entire year. If you don't see a mismatch there, you're in trouble. That is where online commerce is going, and conventional retail is basically disappearing up its own wazoo. NVIDIA, this was a major one of our winners last year. We got a double in 2 months on this, put out a buy On November 2nd, it turns out, and up 86.52% in less than 2 months. We went from 60s and change all the way up to 120 on this. It's been consolidating that double ever since. Probably will double again sometime this year. Europe, weak euro is great for stock markets in Europe. We expect that to continue. Again, been kind of going nowhere, waiting for the French elections. If the Nationalist Party loses on Sunday, then you can expect this one to really take off. And same with Japan. We've been consolidating while the yen has been strong the last couple of months. Any turnaround in the yen becoming weak, this market goes to new highs for the year. Tesla, yeah, love Tesla. I've been in there since the post-IPO drop of $16. Recently got a buy in December, right around when Elon Musk met Donald Trump, and since then we got a more than 60% move in the stock to a new all-time high. It actually hit 313, and I expect the stock could rise 10 times in the next 10 years. Tesla is basically taking over the world car industry. It's already the largest car maker in the United States on a market capitalization basis. What is dominance of the world car market worth in 10 years? Answer, quite a lot, which is why I'm expecting a tenfold gain to 3,000. They'll probably split the stock a few times on the way up like Apple did. But yeah, that's what's going to happen. And I've been involved in the company for 8 years and, made recommendations in the design process as one which they adopted. So, Elon Musk personally, to the extent that he can be known. Not an easy guy to get to know. This is my latest Tesla. I bought 3 of them so far. This is the Model X High Performance, $149,000, fully tricked out with ludicrous mode, 0 to 60 in 2.9 seconds. The problem with that is if you do go 0 to 60 in 2.9 seconds, all your passengers will throw up on you. Yeah, not a good idea. I don't recommend it. It is good for showing off. So, got a good question here from Lisa. Why are you doing this? You clearly don't need to. This is my retirement. This is the reason I get up in the morning. I love teaching people how to make money. It's what I live for. It's my way of getting even with Wall Street after watching them rob people, steal from them for 50 years. I want to level the playing field with Wall Street, give you all a chance to make money. I've made mine. This is your chance to make yours, and I'll show you exactly how to do it. Okay, just taking some other questions. We'll get to gold in a second. Okay, let's move on. Yeah, why did I buy a new Tesla? Why have I bought 3? Well, this is my last Tesla. Yes, tail-ended by a drunk driver on Christmas Eve. Car is totaled. This is it in the shop. Here's the battery pack. Imagine just that little row of batteries will drive this car 303 miles now. It's amazing. I can now make the trip to Lake Tahoe from San Francisco on one charge. Here's the carbon fiber here, which makes the car the world's safest car. And yeah, I got up and walked away from this crash. Didn't even get a neck injury, just took a picture of the guy's license plate, sent it to the insurance company, and they got me a new one. Yeah. Of course, insurance companies still like me very much. This is the second one I've totaled in 4 years. But, hey, you got to test that crash-proof claim of theirs. Turns out it's true. Bonds are up on the year. Unbelievable. Every hedge fund in the world, this was their core short. They're now getting slaughtered. They're stopping out like crazy. That's what pushed yields to 216 last week. That's down 50 basis points in a month. One of the sharpest moves up in bond prices, moves down in yield in history. We are now in a 210 to 230 range for the foreseeable future. Indefinite delay of tax reform means indefinite delay of more deficit spending. That is very bond positive. That keeps interest rates low. Fed move to unwind $4 trillion balance sheet could bring higher rates sooner. It's probably the biggest bond negative event of the decade. No one is looking at it right now. And this is happening just as European interest rates go positive for the first time in a couple of years. They had negative rates for some time. Recent negative hard data on the U.S. economy is also helping bond prices. The hard data is predicting a recession that probably won't happen, at least for 3 years. New trading range on the yield is 210 to 240. Global cash gut is pulling U.S. yields down. We are 6 months into a 10 to 20-year bear market in bonds. Now is a great entry point on the short side, and I do have shorts that I just initiated last week in the Treasury bond market. Here was our major sell signal generated by our algorithm, our market timing index last July. Yeah, we sold there. Bonds dropped 20.68%. We sold here, and then went on the long side here on this bottom and on this bottom. So we've been making money both on the long and the short side in a 6-month period in the Treasury bond market, trading the TLT and also the TBT, which is the 2X ETF, which is short Treasury bonds. We're actually down to about 36 right now. Anywhere north of the 200-day moving average is a strong buy for the TBT. Probably the best entry point in a year for this ETF to buy. And by the way, my long-term forecast, 10-year forecast for the TBT is 200. So if you can buy it at 36, sell it at 200, that sounds like a good trade to me. Here's the weekly jobless claims. Another reason why you want to be shorting bonds here. We are at 43-year lows, right around 244,000. We are at a full employment economy. We'll probably bounce along here at the bottom. Again, a hugely bond negative set of data for the long term. Foreign currencies, strong or weak. Trump says he wants a weak dollar. Treasury Secretary Mnuchin says he wants a strong one. So he's totally confusing the market. UK Prime Minister Theresa May called a snap election for the UK, sending the pound rocketing. Japan's Mr. Yen, Sakakibara, says the yen is headed for 100 to the dollar. If it gets there, that'll be the short of the century. The long-term target for the yen is 200 to the dollar, which means it'll have from current levels. That makes it a fantastic short opportunity. Recently, strong counter-trend Japanese yen suggested a global risk-off move just around the corner. And by the way, sell in May and go away. Anybody heard of that? Yeah, that's like a week off, actually 8 days. So, and it works every year. So the only question is whether it work a little bit or work a lot. So recently, the bond market rallied, interest rate drop, takes the shine off the dollar. Interest rate differentials are the biggest drivers of foreign exchange rates. I know there are a lot of forex traders out there. We probably have the most accurate short-term forex call of just about any service out there. That's what you get from trading foreign currencies for 50 years. Yeah, I was there on the day one when all these things were invented, like the euro, like the post-war Japanese yen, and so on. Here's your U.S. dollar basket, clearly in a downtrend, thanks to the delay in the rise in interest rates and slowing economic data in the U.S. Japanese yen taking a break on the short side. We got to sell there from our algorithm right here. We kept selling every way down, rolling all the way down through the monthly options expirations, and we've been out ever since, waiting to sell. My guess is we hit the 200-day moving average. That is your short side entry point. Here's the euro. Again, we put on a strong sell there, and we had a sell there for 2 years, by the way. We were shorting this thing from 160 all the way down to near parity, and we've been out ever since it hit 100 down here. If anything, I'd be going on the long side here. Again, waiting for the French elections to get out of the way before it takes another run back down here to parity. Energy is a double-edged sword. Notice the license plate here, SIA OPEC. I mean, that's the writing on the wall for the energy industry. Stronger economy is oil positive, but a trade war with China, the world's largest marginal new consumer, could cause demand to slow. Any run up to 55 will see massive new U.S. fracking production pour onto the market. Even without subsidies, alternative energy is steadily eating into oil demand. By the way, last week in California, alternatives accounted for more than 50% of its energy supply for the first time, and the wholesale price for solar energy produced by homes got down to zero. California has become a zero-cost energy state. The entire country will go zero-cost energy in about 20 years. That will cause a new golden age for the U.S. economy. But that's long-term stuff. Right now, we're worried about short-term trading. Long-term crude is the next whale oil. Yep. Haven't seen too many whale oil lamps around recently. Okay, let me take a quick look here. Questions. He is good. Thank you, Mike. You don't hear that very often when you get to my age. Thank you again. Let's see. Just look at these questions. Okay. Yeah. Sell in May and go away is what I said. But equities aren't going to crash, Osmond. They're going to go sideways in a narrow range, probably a 5% range. And the reason that's going to happen is that is the worst case scenario for traders. Narrow 5% ranges. We had one for the first 6 months of last year, and that may well happen for 6 months this year. And by the way, we're already 2 months into that. Oil did collapse. Yeah, we got to bounce back up to 55, then it bounced right back down to the lows again. It's all about supply, supply, supply. Use any rally in the next several months to go short. We've done so several times this year. Everyone has been a moneymaker. Precious metals are shining again. Global risk-off move has gold shining again. War fears in North Korea, Syria, and Afghanistan have traders flooding into gold. Surprise UK election gives gold a further boost. Huge bond market rally sags U.S. interest rates, creating a perfect storm for the barbarous relic. Yes, that's what economists call gold. Any delay of any serious Trump economic policies is giving the bond market and gold a new lease on life. Weak U.S. dollar gives a further boost to gold. Gold miners are finally buying into the gold story, and that's me doing a little bit of early Christmas shopping in the souk in Istanbul. Yes, I do get around a lot. The world doesn't pass through my living room. I have to go out and find it to get these good long-term investment views. Gold's been in an uptrend since the end of last year. We got a strong buy signal on gold. Been in and out on the long side ever since. Waiting to see. Well, it has since already broken the 200-day moving average to the upside by the dips. Real estate, we are now 5 years into a 20-year boom. Millennial demographic wave is about to drive U.S. home prices northward for the next 20 years. Only 2.4 million homes are for sale, creating a severe shortage. Normally rises in the fall, predicts a very hot housing market in the spring. U.S. home building is, is proceeding at less than half the peak seen in 2000s, despite rapidly rising demand, creating a structural shortage. Home equity has been the top performing individually owned asset class for the past 5 years, will continue for the next 10 or 15. If you don't believe me, calculate your own home equity and see how much it's increased since 2011. My bet is that you're up 100% or more and several 100% if you live on the coast. All this makes the home builders a screaming buy. Here's the S&P 500 Case-Shiller, about to approach new all-time high in prices nationally. It's already done so in New York and California. Top performing markets, Seattle, Portland, and Denver, being driven by Chinese buying and also flight money from Vancouver, where prices are even more extortionate. Here's the U.S. Home Construction Index, Again, strong buy right after the election. We've been running with it ever since. This has been a huge winner, up 31.94% in 4.5 months. Yes, we will take these all day long. Trade sheet. So what do we do about all this? Stocks, you want to buy the dips, sell the rallies, play the range for the foreseeable future, knowing that you'll just get stopped out once when we finally break out, whether that's up or down. Bonds, you want to sell every rally. Commodities, buy the dips. Currency, sell the rallies in currencies and buy the dollar. Precious metals, buy every dip. Real estate, buy and stay long. Yeah, you don't want to trade your house. It's too expensive. Make that your core long-term investment. And yes, Osman is asking about steel and U.S. steel. Again, very strong long-term buy. We've had a massive correction since the beginning of the year, as we have on all the Trump trades. This is a great entry point for U.S. steel on the long side. That's what our market timing index is telling us there. Show us one trade that didn't work. Well, I will in a second. Nobody's perfect. Only about 90% of our trades, 10% we stop out, and only then because we have very tight stop loss parameters in our system. It's much better to dig yourself out of a small hole than a big hole. Let's see. Joshua in Pasadena, California. It's one of my old haunts. I took some courses at Caltech in Pasadena. Let's see. What are the potential triggers probability for a Treasury bond rally resulting in a yield lower than 2.1? Lower than 2.1, you really need to see signs of a recession or an impeachment of Donald Trump, which could happen in 6 months, depending on what the FBI finds. Any impeachment will put all of Trump's expansionary policies on hold. Yes, Michael Pence will pick them up, continue with the same policies, but there will be about a 6-month delay while the impeachment takes place. That could get you a good 10 to 20% correction in the stock market. That would also take 10-year Treasury yields down to about 150. I don't think we'll hit the old low of 133 again, but 150, certainly 160, which is the old breakout point, certainly comes into play. Let's see. What's the nickname for gold? The barbarous relic. Yes. Given that name by John Maynard Keynes because gold has been a currency for 5,000 years, and that's why he calls it barbarous. Are you short or long? Yen, says Lewis. I am out, waiting for the yen to top out so I can run big shorts and take the yen all the way to 150 and then 200. First 125, then 150, then 200. Let's see, what else have we got? Buy at 45, I would, Brian. I would for a trade. I would look to get out at 50 and then wait for the next dip to 45. Eventually, we could break down to 40, especially if the next OPEC quota agreement fails. Let's see. Let me read these other questions. Okay, let me move forward. Here is the long view, and this is the most important slide of this presentation. By the way, I work every summer out of Switzerland, Zermatt, Switzerland, where the Matterhorn is, and here I am watching climbers come down from the top of the Matterhorn, which you can see with binoculars. The 2000s to 2010s were the hard decades for making money. 2020s and 30s will be the easy ones as the global demographic wave brings on a new golden age. 85 million millennials, yes, there are a lot of you out there watching today, will become the next big spenders over the next 15 years, while 80 million baby boomers, a drag on the economy like me, fade from the scene. Except I'm not going to fade from the scene. I'm going to be the last baby boomer kicking out there, trading the markets like crazy. They're going to find a mouse in my dead, cold hands and my brokerage trading platform open when they find my body after I've gone on to my just reward. In the meantime, central banks will bridge the current 2008-2022 peak spending drawdown with aggressive monetary and fiscal policy now from the United States. This has happened before. I have seen this happen before. In 1982, when Reagan came into office, the Dow was at 600. No, not the S&P was at 600. The Dow average was at 600, and it took it 18 years to get to 12,000. So that is a 20-fold return. We are already into the 20-fold return. The Dow has gone from 7,000 to 22,000 so far. You can do the math. 7 times 20 is 240,000 in the Dow. It will do this within a 20-year time frame, and maybe sooner, because we have the internet where everything happens at warp speed. Everyone's plugged in and communicating like crazy. So yeah, we are basically like only as far as 1986 in terms of this move to 20,000. So yeah, anything you touch is going to go up. You're going to look like a genius during the 2020s. Just don't blow all your capital doing marginal trades now, because it gets really, really easy after about 2020 or 2021. We are at the beginning of one of the great secular bull markets of the century. Yes, I'm not kidding. This is not made up stuff. This has happened before. This kind of bull market happens every 40 years. The next one has just begun. So how to take advantage of all this, how to take advantage of one of the great, probably the great bull market of the century, which we're only about 7 years into. Sit with me, John Thomas, the Mad Hedge Fund Trader, and my Global Trading Dispatch. Discover how you can tap into the top performing trade mentoring service in the industry, up 41.68% a year in impossible markets and unpredictable markets, I might add, with utterly worthless polls everywhere now. Follow my research and market-beating trade alerts, and you will rake the profits in. Okay, keep your questions coming in, because I have a couple breaks coming up. Quincy's asking, impeachment on the table? Yeah, I give it a 50-50 chance. Totally depending on what the FBI comes up with in their investigation, and they are keeping their cards very close to the chest. There are 2 people in the world, I guarantee you, who've seen Donald Trump's tax return. One is the head of the FBI. The other one is Barack Obama. Yes. Currencies. Let's see. Sell dollar. Giorgio, yeah, I would be short the dollar for the short term, the very short term with a tight stop loss. But the big long-term trade here is to buy the dollar, because eventually interest rates will go up sharply. Scott, what about mining stocks? Great long-term buys. Rio Tinto and Broken Hill Proprietary are your big names there. And by the way, they've just had sharp sell-offs, so this is a really good entry point for the mining stocks, especially for iron ore. Yes, I would buy the miners on the dip. We are having a dip now. Good entry point, Kate. Let's see. Here's a good question. Do you only do options? No. Every trade alert, Nagendra, we send out has a combination of recommendations for stocks, ETFs, options, and futures contracts. That way you can tailor the trade alerts to meet your own experience and risk tolerance. Let's see. Do you have a position in gold miners? No. I'd rather play the metal itself at this point, because miners get dragged down by the stock market. They are stocks. That's why they've been doing nothing for the last 2 months. Gold itself has been going up, Kate. So that is the reason why you play the metal if you like gold. Gold miners are always subject to a stock market correction. Yeah, I know it makes no sense at all, but that's the way the markets work. Let's see. Somebody's making a comment about their wife. Are you on Twitter? Yes, I have a Twitter feed. Just go to madhedgefundtrader.com and sign up. Let's see. Yeah. Why are you bullish with all this political instability around the world? Because political instability is in the price. We all know about this. That's in the price. So when they unwind, when they stop, stocks go up. Walla is asking about uranium. That's a no touch for me. The whole industry was wiped out by Fukushima and just created horrible sentiment for the area. The only builders of Nuclear reactors left these days of the Chinese. They plan to buy 100 and build 100, and that is it. Are you playing a recording later? No, I'm not. Let's see. Okay. Just going through more questions. Okay, let me go ahead with the presentation. This is the only audited trading performance online you will find, because we are the only people that actually make money. The rest of the people make up their performance. By the way, yeah, they issue tons of buy alerts, never issue sell alerts or stop losses. So up an average annualized 37.35. Yes, this can be your own long-term performance. If you can't be happy with 37% a year, you better find a different profession. And it's probably not a legal one if it makes that much money. Let a Marine combat pilot steer you to big profits. We trade single stocks, options, and ETFs for global equities, bonds, foreign exchange, energy, commodities, precious metals, and real estate. And no, that is not the plane I flew in Desert Storm. That is a 1932 Tiger Moth, which I have a part ownership in Cambridge, England. Design flaw, gas tank right over your head, okay? After you fly this, your hair is completely covered with oil, and so are your goggles. Oh, and no brakes. It has a tail skid. That's why we can only fly this on grass fields. This is our January trading record, and it's pretty typical of a normal month. You can see which asset classes we're in. Here's our profit and loss for each one. We bought the S&P 500, went short treasuries, bought the Russell 2000, bought Amazon, Apple. Biogen, we got stopped out of for a quickie 21% loss on the options because of a tweet by a certain president that said that drug companies were getting away with murder. So we stopped out one day later on this trade for a quickie 21% loss. But it's easy to stop out when you know you're going to make the money back on your next one or two trades, and that's what we did. Bought Palo Alto Networks, went short the Japanese yen, sold U.S. Treasuries, bought the S&P 500, and bought gold. And this is the audited P&L for every one of these trades. Again, we do 10 or 11 trades a month. That works out to 240 trade alerts a year, or about 120 or 30 round trips a year. This is how it works. I issued a new artificial intelligence report on November 2nd when NVIDIA was at $68. This is what it looks out. I send it by text and email. NVIDIA, buy at $68.57 a share or best. It's an opening trade. Here's the date. You buy 146 shares to get that $10,000 weighting. We do all the math for you. We take all the thought process out of this. So all you have to do is execute on your own online trading platform. What happened? NVIDIA up 78.5% in 2 months. This was the huge win. We then issue another trade alert saying take profits. Sell NVIDIA at 120 or best. That means as close as you can get to that price. Closing trade, that's the trade date, portfolio weighting, number of shares, and here's the profit. 146 shares at $68.57 a share means a profit of $7,500 on this one $10,000 investment. Yes, this is how it works. It's fully audited, transparent. Everything you need to know is in here. Who else wants to bank a six-figure profit? Let me go through some more of these questions. Do you trade a fund open to the public? No, I stay out of that because of the regulation, which costs about $1 million a year. It's not worth it. Yes, I did that years ago. I'm too old for this stuff now. Let's see. How fast is your trade alert service? It's about 1 minute from the time I issue a trade alert to my staff to the time they can get it out by text alert, email, and on the website. It's really almost instantaneous. And if you signed up for the text alert service, it literally is 5 seconds for these alerts to go everywhere in the world. We have about people in about 130 countries follow us, and you can get the text alerts instantaneous. Joseph in Portland, Oregon, can we talk to you directly? Yes, Joseph, I spend part of every day calling readers and looking for ways to improve the service. You can email me anytime, and I always answer same day. And we have biweekly strategy webinars where we can have a chat box just like this one here where you can send in questions. Charles, it says you're on my site, but you can't see where to sign up. Well, that's because you're going to get a special offer today that's not available on my website, so I guess I better get to that. Let me take a few more questions. Joe in Detroit, Michigan, I've never done this before. Can a beginner start with no prior experience? Absolutely, Joe. Bringing beginners into the market for the first time is one of the primary goals of this service. When I started this service, GM was going bankrupt, and we actually had hundreds of former GM workers become expert traders thanks to the service. Let's see. Just reading through these questions here. How often is the newsletter sent out? Says Joel in New York City. Joel, every day the market is open. It's about 250 times a year. And let's see what else is here. Gary in Garden City, New York. What is your best stock pick in the market today? Gary, I'd go with Goldman Sachs. It's just had a 20% sell-off. Mergers and acquisitions are at all-time highs. Dodd-Frank is headed for the ash can of history. Interest rates are rising over the long term. All good things for banks. Goldman Sachs could double from here. We do have a great entry point right now. With my Global Trading Dispatch service, you get a daily research newsletter giving you the deep background on all trades and economic trends in play. Instant trade alerts texted to you at market sweet spots. Bi-weekly live global strategy webinars. Let our 100 years of combined trading experience pay off for you. Invitations to strategy luncheons around the world. And I will give you the name of a great surfing camp in Morocco where I spent last summer. And yes, they had a seniors class. Good. That's my loyal camel, George, who followed me everywhere. Here's another testimonial. Let me go through the questions again. Will there be a recession? Says Robert in Seattle. Not this year and not in 3 years. I expect one in about 3 years. Here's some real black swans in New Zealand. They do bite. That's why I'm keeping my distance. I'll take one more question. Jim in Palo Alto, California. Are you an algorithm? No, but I play one on TV. If I knew a good machine noise, I would make it. Just come to one of my lunches. You can pinch me, and if I bleed, I'm really not a robot. So here's what I'm not going to charge you for this service. I'm not going to charge $100,000 a year. That is what I do charge my big hedge fund clients, and they're happy to pay it because I make them millions. And I'm not going to charge you $10,000. That is what I charge my concierge clients who get my personal cell phone number, use me as an investment 911, call me any time of the day or night. Here's why I'm not going to charge you $5,000, which is what I charge my advanced option trading clients. I'm not going to charge you $3,000. That is the lowest price you'll find on my website for a one-year subscription. Today, this is the real deal, but not for you. Creating this product cost me millions of dollars. We have the best customer service in the industry. Yes, you get to talk to real humans. Running it costs millions more. Here's the offer you can't refuse. Today and only through this webinar and right now, we'll give you 3 months for just $497. We know when it comes to renew in a year, you'll happily pay the $3,000 a year like thousands of our current subscribers are. Just check on the blue link in the chat box on the right. That takes you to a dedicated special offer page, which you can only get through this webinar. Please click on the link on the chat box on the right. This is a one-time only offer. We only take 25 new subscribers at a time. They usually go out in about the first minute. So it's first come, first serve. I can't wait to make you a top drawer trader. We don't take any more than that because we don't want to overwhelm the market with our trade alerts. the combined buying power of our customers is about $1 billion. And we have tested this time and again. Let me make the money for you to pay for your own subscription. You make the trades, discover how an experienced hedge fund manager finds and exploits the best sweet spots in any market. We told you which stocks to buy during the Trump melt up. Who will tell you what to buy during the following meltdown? Just click on the chat box on the right. Just 3 months for $497. Let me show you how to make the money. Usually people make the money for a year on the first trade. That's what happens about 90% of the time. So just click in the link on the chat box on the right, and let me take a few more questions until my time runs out. Tino in Canada, what's the average time in a trade? It can be anywhere from a couple of days to a month. I usually don't go out longer than a month in this kind of market because we are in a narrow range. If you don't take your profits quickly, you'll end up crying. And when we do get prolonged bull moves, then we end up doing much longer term trades and hang on to them for much longer. We won't have that kind of market probably till the last quarter of this year. How much do you recommend for each trade? Kate is asking. The answer is we start with a notional $10,000 for each trade. We give you the numbers for that, but if you can only do $1,000 for each trade, just divide by 10. It's that simple. That's why we started with the $10,000 assumed value. And actually, we can go all the way down to $500 per trade. That's probably the minimum you can execute in the market. That's about 1/20th of what we send out with each trade alert. Awesome, says Quincy. I'll take that all day long. Do you give stops and targets with the alerts? Sal, yes, we do. Every trade alert has a stop loss point. That's the eject button where we don't want to lose big money. We only want to lose small money. And we also send out alerts on when to take profits and when to stop out. It is a full service. This is like running a hedge fund from your own home. Stop loss strategy, whenever we reach 2% of total capital on a single position, we are out of there. Like I said before, it's better to dig out of a small hole than a big one, and I'm too old to lose all my money and start over again in life. How do we learn about you? Well, I've told you quite a lot already, but you can go to my website, get my full bio there. It's all true. Is this stocks only? Do you do futures? We do a lot in currencies, treasury markets, and precious metals, where futures are a major element. About 25% of our followers are pure futures traders, and they use us for their market timing. If there's a question, can we call customer service? Absolutely, yes. Just send us an email, or you can call customer service. And they'll either answer your question or pass you on to me. Your iPhone won't show a chat box. Okay. Jeanette, I don't know what to do about that one. So maybe Jeanette will email you the link afterwards directly so you can have a chance to buy at this special offer. Let's see.
I've been responding, John, to those people who say they don't have it directly. Hopefully, they're seeing the madhedgefundtrader.com/trade link, or maybe you can type it on the slide or something. I don't know. I've been responding and I've been posting, so hopefully they're seeing it.
Well, thank you very much. John is asking, after 3 months, what are you going to charge per month? Answer: we don't sell monthly subscriptions. We don't sell quarterly subscriptions. It's $3,000 per year, and that's all we do. But I'm pretty sure in 3 months you'll be begging us to take the $3,000 for a 1-year subscription because 90% of your trades have been successful. I talk to people every day who take this, and believe me, everybody can do this. Let's see. Okay, I'm going to keep answering questions, Jeanette, unless you want to shut me up. Why did some hedge funds went out of biz? Answer: there's too many hedge funds. There's 10,000 hedge funds. The golden age of the hedge fund really was the 1980s, when there were only about 2 dozen of us. once the numbers got up into the thousands and the assets under management became too big, most of the trades that worked didn't work anymore. Okay, just reading more questions here. George in Austin, Texas. What's the bottom in oil? 45 for the short term, 40 for the medium term. I don't see us melting down to 25 in this cycle. That will happen sometime in the future, but not this year. Okay. Any other questions? Let me just read here quickly.
Okay, Don, maybe take one more question and wrap it up, and we'll pass speakers. Yeah, we're good.
Okay, great to work with you, and look forward to talking to you again.